Hello, fellow old dogs. Bill Manacero here, top dog at the Old Dogs REI Network. I just wanted to take a moment to welcome a new sponsor to the show, Health IQ, a company that gives health-conscious people the best life insurance rates and quotes. Learn about what they can do for you specifically at healthiq.com/old dog. That's all lowercase letters, and dog, of course, is spelled D-A-W-G. That's healthiq.com/old dog.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast, and subscribe. Well, today we've got a great guest. On this show, we often talk about being passive real estate investors. But did you know there are different levels of passive investor? For example, I, as an owner of multifamily properties in other states, delegate but manage my properties or assets through property managers in the various states that I invest. I call myself a passive investor. But there are investors who are even more passive. Passive investors, for example, who help fund passive investors like me, who do not deal with the day-to-day activities of managing the asset, but entrust the profitable management of their asset to a person like myself to make sure that they get a nice return on their investment. And then there's another level of investor who may not even know the asset manager personally, but invests through crowdfunding. And that's the place we're going to go today. We're going to speak with an individual who is really an expert on crowdfunding as it pertains to real estate. So I'd like to welcome Ian Ippolito. And Ian is an investor and serial tech entrepreneur. He has been interviewed by the Wall Street Journal, Business Week, Forbes, Time, Fast Company, TechCrunch, CBS News, Fox News, Old Dogs, REI Network, and more. Ian was impressed by the potential of real estate crowdfunding, but frustrated by the lack of quality site reviews and investment analysis. That's why he created the Real Estate Crowdfunding Review to fill that gap. And that's what we're going to talk about today, although he's got a great background. Ian, welcome to the Old Dogs REI Network.
Thank you so much, Bill. It's a pleasure to be here.
Well, it's great to have you here. This is an area we've had a lot of interest in, and folks have been asking about crowdfunding and how to get involved in it. But I thought maybe you could kind of take it back a few steps and give us your background, how you even got involved in investing in real estate.
Well, I kind of had two lives as far as investing because I kind of had my first life as an investor. Maybe it was the more typical story where, I was working and I was saving money and I was trying to find some way to build up my net worth. And, I did that for a number of years. But over time, I actually became an entrepreneur, a tech entrepreneur. And what happened then is I was fortunate enough. It took a while. It took like about 10 or 11 years, but I sold my company and there was a big payout. So I had this money to invest, and all of a sudden now I had to support myself and my family on that because, I sold my company. So I didn't have a job per se anymore. So, that became my full-time job. So I kind of had like two starts, to being an investor. But, growing up, I grew up like in a middle-class family, and we didn't really talk about investing or stuff like that. Like I didn't really even understand, how most of it worked. And I guess I was fortunate enough, my dad, he was able to provide for us. We didn't have to worry about that sort of thing. But I remember it was actually in college. I read a book called Wealth Without Risk by Charles Givens. And okay. And it just was fascinating to me because he didn't just talk about real estate. He talked about all sorts of different aspects of investing from, stocks, bonds. He talked about purchasing tax liens. He talked about, real estate. He talked about rentals. And I realized, wow, there was like a whole world out there that I really knew nothing about. So it really got me interested in, learning about it. And I remember I was really excited about real estate, and I went and I bought one of these real estate courses, which was, I don't think he's even in business anymore, but it's Carlton Sheets.
Yeah, he's
And
still around, believe it or not.
is he still around? Okay. This
Well,
was a long time ago.
yeah, sure.
Awesome. Awesome. So, I bought that, and, you know, some of it, I would say was, a little bit of hype. Maybe about 20% of it was hype, but about 80% of it was really good, solid stuff that I learned. And it got me confident enough, I felt, where I could like try to like get rental properties and stuff like that. So that's kind of what I did my first incarnation, as an investor. I purchased like a condo that I went to live in. And then after I was done with that, I thought I'm going to upsize to a new place after, I got a new job and got a raise. And I thought, you know what, I'm going to rent this place out just like Carlton Sheets said. So, I went through that process, and it was, that first condo, it did pretty good. I rented it out. It was probably in a good price range for rents. And it did well. My mistake was that I really didn't understand what I was doing. So, what ended up happening was, so I had that rental, which was working fine. And I thought, wow, to make more money, I should roll this up into a more expensive townhouse. So, I bought the more expensive townhouse, and I thought, okay, I'm going to sell the little one, and I'm going to move myself into yet another house, a more expensive one. And then now I could rent out the kind of medium townhouse. I had no clue back then that, the amount of rent in proportion to, the amount of your mortgage or, whatever you're paying on it changes based on, the price points of the property. And I'd gone up too high. So I didn't understand any of this. I kind of went into it, and I started losing money on that second townhouse. So after I think about a year and a half, I was like, okay, this is not going to work. I have a mortgage on this. I can barely afford to pay the maintenance. This is, I kind of messed up. So I pulled my money out, and, I sold it and everything. And I kind of didn't get back into real estate until my second life, as an entrepreneur was over. So that was like 15 or 16 years later.
Right. Wow. And so, revisiting it, you sounds like you wanted to be on less active involvement as opposed to having to find the properties and make the numbers work and so forth. You were looking at ways to invest. Now, why weren't you going for the stock market and typical places that people would invest?
Well, about the time I sold my company was 2013. And the stock market had been very volatile before that. So, I was comfortable putting some of my money in there, but I wasn't comfortable with making that like the main engine that I was going to depend on. I mean, I saw all the people who had been wiped out. I had a financial advisor actually who had tried to convince me in September of 2007. So, it probably was like the very worst time to be going into the market. And that advisor had tried to push me big time into, investing into stocks and stuff like that. Thankfully, I thought it was a little bit overheated, didn't do it. But it was just too volatile and not something that I could predict. It's like one year it might be up great, and the next year maybe it might be down, or it just didn't seem stable enough to me.
Yeah, that's an interesting part of your background. I thought the fact that you had a financial counselor that was directing you into the market right before this major crash, and the fact that you didn't do it is pretty amazing. I mean, you must have had a pretty good sense of what was going on economically.
I mean, I did just for my own business because at the time I still had my business. So I could see that things were just slowing down for reasons I didn't understand why. And I was like, well, this is strange. It's not seasonal. So what's going on here? And it felt like a bubble at the time. Everyone was so excited. Everybody was into flipping houses. Everybody that I knew was flipping houses. People that had no experience in it whatsoever beforehand. They might be working at a convenience store or something like that, and they're flipping houses. And so I thought, something is this whole thing just it doesn't smell right.
Right.
Okay, and so basically, after taking a look at the stock market and seeing how volatile it was and how unreliable it was, and needing a very steady income to provide for myself, I took a look at the alternatives, and there were a bunch of things that I looked at. I looked at things that were way beyond the normal stocks and bonds. I looked at a lot of the kind of the alternative finance stuff. So I looked at like peer-to-peer lending, where you like are a bank and you lend to other people. But the problem with that is it's unsecured. So it's like making someone a loan so they could pay off their car loan or something like that, and you wouldn't get title to the car. So I came back again to real estate, and and I saw, these returns are a lot more predictable because the cycles, unlike the stock market, are a lot longer and they're a lot slower. So you can kind of get ahead of things, and you can kind of ride these waves where it's really difficult to do in the stock market. And also at the time, I talked to my father-in-law, who is a real estate developer, and he told me about his secret plan to retire. He said you can't develop real estate for the rest of his life, but his retirement plan was basically to get about 15 or 20 rental properties, have them all paid down, and just to collect the income off of them. And I thought, wow, that sounds like a really, really steady source of income. So that's kind of how I got interested in it.
Oh, that's great. But you decided for some reason not to move into actually purchasing properties again. Were you sort
Well,
of?
you know what? Actually, I did. I did that too as well.
Oh, okay, okay.
hmm I did. I bought 8 properties actually last year, rental properties, and kind of implemented what my father-in-law had suggested. In addition to going to the real estate crowdfunding, I think they all have kind of like their advantages and disadvantages. So I kind of wanted to diversify into both.
Oh, that's great. Are you buying a single family home still, or are you buying multi?
Yes.
Okay, gotcha.
So single family homes. I live in Tampa, which is like a really good market because everything went way down after the
Oh,
crash.
yeah, that's
So
hot. That's on our top 10 list. Yeah, Tampa is one
yes,
of the hot areas. Yes.
yes, Tampa is. So there was a lot of opportunity, and even in the last year, the prices have come up quite a lot, which has driven down the yields. But yeah, those have been doing very well. So I have that, which is nice because and actually in those, I was hands on. I was involved in the acquisition and picking the which ones I wanted and making sure they were like there's a certain type of house that I want. So picking all that. But then on the other side of things, with the real estate crowdfunding, I can kind of defer everything to a manager who has a lot more experience than I do. I have the advantage of being able to put it into an investment where, like, to buy you know, so let's say that I wanted to get a triple net lease on a nice Walmart or, Walgreens or something. Most people aren't going to have the amount of money to buy one of those, but a
Right.
lot of people, yeah, but a lot of people might have $10,000 to stick into something, or they can put a smaller amount into it. And so, say if a person, let's say a person had, like, I don't know, let's say $100,000 that they wanted to put into real estate, they could put that $100,000 into you know investments in their local area, or maybe they might want to split it into $10,000 investments through crowdfunding that they could diversify across geography and maybe even across asset types. So now maybe if retail is doing bad, now all of a sudden industrial maybe is all right, or maybe this part of the country is doing better than maybe Houston is. So it gives a lot of diversification.
Now, what's your personal criteria when you go crowdfunding and you're looking to invest on the crowdfunding portals?
Well, a lot kind of depends on I didn't tell the one story of a failure that I had at the beginning of my second career as an investor, which kind of drives a lot of what I do now.
Well, we're gonna hit that. That was my next question anyway. Your biggest mistake here. So let's hear it.
Well, basically, what it was is so after I made the good decision of avoiding that financial advisor's advice, and I said, okay, I'm not going to put all my money in the stock market. I instead, right around that same time, I invested in a fund, and it was very similar to what real estate crowdfunding is today, but it was kind of like the version 1.0 of crowdfunding back then.
Right.
So so it was a limited partnership, and it was a syndication basically,
Okay.
and it was investing at the top of the market in residential real estate houses and buying individual houses.
Okay.
And I didn't understand anything about market cycles. I didn't understand any of this stuff. All I knew was that I saw that the home prices were rising and that these guys were supposedly experts in it, and I thought that they would do a good job. So I put in a significant amount. Like it was a six-figure investment,
Mhm.
and it was a significant part of my net worth at the time. And it didn't do well. Right away, within about half a year, I noticed that they were charging all these fees, but they weren't really doing anything. They weren't buying anything, which maybe was a good thing because it turns out that that would have been horrible timing. But the reason why was because all the credit markets had frozen, so they couldn't get a loan,
Right.
to make these purchases. So okay, well my money was just sitting there. At least it wasn't being wasted, but the fees just kept on climbing up every single quarter, more and more, and they weren't doing anything. Um, then finally they said, well, you know what? This whole residential stuff, it was a bad idea. We're going to switch strategies, which actually probably was also a bad choice because if they actually had purchased at the bottom, they could have probably made a killing.
Mhm.
But, you had to be very brave. So I understand. So they switched over into multifamily, but they didn't do such a great job. It took me over a decade to get back the money out of that I did get back, and it was not even all the money that I had put in.
Really?
So
Wow.
yes,
Ah.
yes. So that definitely affected me, and made me very very cautious when looking at. So you asked, what do I look at? The first thing I do is I try to poke every single hole in every investment that I look at to see, what could go wrong. What if your expectations don't succeed? And I kind of look at what will happen if this just goes completely off the rails. What kind of protections do I have as an investor from this turning into something completely different that I wouldn't want to be invested in, that sort of thing.
So you kind of look at worst case scenarios at each one that you evaluate.
Hmm.
Are you looking for like do you have like a 5-point list or something? For example, the amount of experience they have, the interest rate, the return. I mean, do you kind of go into it like that, or you just kind of just take each one at face value?
It's probably face value because they're all so different. Like, what I would expect, with crowdfunding, what's awesome is you get exposed to all these different types of real estate. So, what you might expect as a reasonable return on like making a hard money loan to somebody is going to be different than if you are investing in equity in maybe, it's a multifamily value added where they're going in and buying an apartment and it's like, class B or a C, and then they're fixing it up and then selling it in like 4 or 5 years at a higher price.
Right.
So I don't have like one particular rule, or a set of 5 rules. I do kind of look at them individually, but I think the big thing is that I'm always kind of looking at it, at least right now, at this stage of the economic cycle. I'm always looking at it from the point of view, okay, things are good now, but what happens if there's a downturn? How is your plan going to perform? And then I kind of like poke holes in it and ask them a lot of questions, and sometimes because of that, I don't hear back from them, which is fine. That's great. That helps me. But sometimes I get the answers that I want too.
Right. Where do you? I mean, you seem like you had a pretty good idea where the economy was at in 2007, as that financial advisor was trying to push you into investing. Where do you feel the market is? And I know that as an investor, there's sort of a national outlook, and there's also very different on the regional level. And
Yes.
so, where do you see? I mean, are you looking, at like when you invest in a crowdfunding portal? I mean, they could be
Mhm.
anywhere. They could be in Texas
Yes.
and wherever. Do you look at that specific market? Do you look at the national economy? How are you approaching that?
I look at both. So, and you're totally right because there is kind of that national aspect, and there's definitely a huge local aspect.
Hmm.
For example, here in Tampa, I was seeing it with my own rental properties, and so was my father-in-law. Basically, my father-in-law, he also runs a property management company, and so he manages a lot of these rentals. And every time he's trying to push the rents up, which he's been successfully able to do for a number of years now. Well, starting about middle of this year, all of a sudden he was getting pushback, and he wasn't able to raise the rents. And
Hmm.
so that was like, that's a little bit of a danger sign.
Red flag, yeah.
Yes, exactly. In my own investments here in Tampa, they've done well as far as price appreciation, but I also noticed that the rents were kind of like rising at the beginning of the year, like they'd always been, and then they either tapered off or started going down a little bit, which is something that hasn't happened in a long time. So that also was like, what's going on there? Um, I do. It seems like there are several markets around the country that are like that right now, especially the really big ones. Like if you look at like New York and LA, there's places where a whole bunch of international money has come in, and they're considered gateway cities. People
Hmm.
recognize them. They're well known, so people flood the money into there, and it's never good to have too much money chasing too few deals, and so. As a result, like in New York, for example, they're having to offer a lot of rental concessions, and they have to say, okay, you get such and such if you sign with us. So there are definitely signs in different certain markets, that we're closer. I think we're closer to the end than we are to the middle.
Yeah, I mean, I'm in Southern California too,
Okay.
and it's a lot of consensus right now that this is really the top of the bubble, and
Mm-hmm.
that it's really not going to go that much higher. I mean, anything can happen, but it just
Mm-hmm.
every sign is there. A lot of the things that you were talking about as well, and so that's. I think that the smart investors are selling now,
Mm-hmm.
and
Yes.
and getting ready for the downturn, and then so that they can buy when it's on the bottom again. And
Mm-hmm.
but yeah, but there's markets that I'm investing in where it's very much different. Where the rates, the cap rates, for example, are very healthy still, not as compressed.
Mm-hmm.
I mean, here you've got 3 and 4% cap rates. It's
Yes.
crazy. I mean, and just maybe 5 years ago, 7 and 8 would be average in the same
Unbelievable.
area. So yeah,
Mm-hmm.
just crazy. And so yeah, but other areas of the country, it's almost as if they're at the bottom of the cycle, and there's good areas that you can invest where there's just a lot of
Yes.
growth, a lot of jobs coming in, a lot of people moving there, and so forth.
Mm-hmm.
So
Mm-hmm.
it's just a matter of being able to find those. But
Mm-hmm.
you mentioned sort of your biggest mistake, and conversely, since you've been investing, and what would you say was your biggest success?
Well, I think my biggest success is just the fact that I have been able to kind of achieve what is like it's been a dream of mine, since I started working was to not have to work.
That's
So
great.
to be able to successfully generate enough income for my family and myself to live on and to be comfortable, like that's like every day I wake up, I'm like, this is crazy, this is like I'm living the dream. So um, I'm very happy. I would consider that to be my biggest success.
That's great. Now, do you have a certain return that you're getting pretty consistently as you're investing, especially through crowdfunding?
It goes all over the place. Like, for example, I'm invested in this a hard money loan fund.
Hmm.
Um, it's called Broadmark,
Hmm.
and it's a really awesome fund, I think, because they actually have two funds, Fund One and Fund Two. I think Fund One is located like in the Seattle area, the northwest of the country, and then the second fund is like more of the middle of the country, like Colorado and stuff like that. But they have hundreds of these hard money loans, and so it's instant diversification. they also have a cool thing where after a year you can withdraw your money after any quarter. And that one, for example, it's been yielding, it's close to 11% now for the last
Really?
yeah, for the
Wow.
for the last however many years. Like I got into it probably about a year and a half ago, but looking at the performance over time, that's it's been pretty consistent. So I've been very happy with that return.
God, that's great. That's great. Well, just out of curiosity, with the crowdfunding, you zeroing in on some of your efforts, your review site. Tell us a little bit about your site and how do you review these various crowdfunding portals?
Well, what it was at the beginning, there were so many portals, they were overwhelming me. And I thought, how am I going to figure out which ones to put my money into? And I noticed right away there were some problems. Like none of the sites had enough investments on it where I could put all my money into it. Like I wanted to put, have a nice diversified real estate portfolio across different geographic regions. I wanted different asset types, and there was like no one site that did it. So I realized, okay, I'm going to have to pick like maybe at least 4 or 5 different sites to kind of specialize in whatever. And then I was confronted with there's probably like 100. Now there's like 150, but at the time there were 100 different sites. So how do I pick? And every single one of them, of course, claims that they're the best and that they do, the best due diligence. And, so it's like, how do you choose? So I ended up doing like a really deep dive on, what, on all of them basically. And I talked with the founders when they would let me talk to them, or I would talk to whoever they would let me talk to and went into their legal documents to see how they were set up. Because some of them, for example, if the platform goes bankrupt, you're in trouble because basically your investment is tied to that platform. Other ones are set up where if the platform itself were to go bankrupt, your investment still lives on as a separate entity. So, there's all these little things that, they don't disclose at the beginning, but that are really important that, I wanted to analyze. So that's how I basically did it. I went through, all these sites and I came up with like kind of like my top 25, and out of that, maybe in like my top 10. And then people started asking me for it. So, I got tired of emailing it to people. And so so I said, I'll just put it up here on this website. And that's how it kind of started.
And that is really interesting. And you're still reviewing them today. I mean, for
Hmm.
the most part,
Hmm.
that's great. That's and what's the web address for that? We'll list all this in our show notes, but just for our listeners here, and they know that you can check olddogsreinetwork.com /blog for our show notes. And but what's the web address for your review?
Cool. So the address is therealestatecrowdfundingreview.com. So it's a long name, but exactly what it is, the real estate crowdfunding review.
I like that. I've got a long title on my website here too. Would you be willing to share with us your top five? Are you prepared for that?
I wasn't prepared, but I can pull it up. Basically, the number one right now. Okay, the big thing that is differentiating right now the kind of the better platforms, in my opinion, from the non-better ones, is transparency.
Mm,
You remember how I talked about how like I got into that syndication that was a bad deal back in the
right.
old days when all you had were syndications. There was really no real transparency. Like you had to kind of rely on the person offering you the investment to hopefully reveal all sorts of information about them, what their performance was, and of course, people have an incentive not to tell you when they mess up. So, what the number one site that I like the best right now is called Peer Street, and the reason why is because they have 100% transparency, and they're actually there's only two sites right now that do this. They are one, but basically what it is they say here's every investment that went on the site, here's what it said it was going to achieve, and here's what it actually achieved. Or if it's like in the middle of paying out, here's how what they are at right now. So, that kind of and so happens that, the performance is really good. So, it helps them to show that they're really good. But that kind of transparency is really awesome.
God,
So,
that's great. Peer Street, PER,
uh-huh.
like
S
peer. Yeah.
Peer Street, yes, like
Okay.
peer to peer, or someone who's my peer.
Yeah.
And
Right.
it's actually co-founded by one of the guys at Google who created Google Analytics, which anyone that
Oh
does like
yeah.
web stuff, yeah, would know that. but that's Peer Street. Some of the other ones that are good, I ranked as number two, Real Crowd, Realty Mogul, and Realty Shares. All of them are pretty similar. They all have really good volume, which is important. Like I said, a lot of them don't have very much volume. Some of them might have like two or three investments. So, you spend all the time picking the platform and then there's hardly anything there. So, and those are all a good assortment too. They've got commercial, they've got residential. They have, all of those are set up where they have bankruptcy protection. So if the company itself were to go bankrupt, your investment's not going to go belly up. It'll still continue going on, and they have a lot of deals. And then I think the next one would be acquire real estate, which is a really an interesting one for people that are looking for kind of these core real estate investments, which if people aren't familiar with what those are, they're basically they're more conservative, but kind of like considered the bedrock type of investments if you're an institutional investor, which are these are as an example, it would be something maybe in the downtown, maybe it's in downtown Boston, and it's in a very, very solid location where you really don't have to worry about demand or anything like that. It doesn't yield as high as some of the other things, but it's a steady performer. And in a recession, it's going to be something that's going to hang on versus something that's maybe in an area that doesn't have such great demand, and then a recession hits, and then maybe they lose a few jobs, and then all of a sudden it's in big trouble.
Right. Now, there's, I remember reading in your bio information too that one of the things that you were interested in are those that have reasonable points of entry. I know that in a lot of crowdfunding sites that I go to, that unless you're an accredited investor, that you can't invest in a lot of the deals.
Yes.
Now with these, what are there varying points of entry in terms of your investment?
Well, you bring up a good point there about the accredited investor. That was something that I criticized the industry about for a while, which they are improving actually. So yeah, it used to be that all of them you had to be an accredited investor in.
Right.
Now there are three, and there were always like a few little sites like Ground Floor and some of these that would allow you regional deals where if you happen to live in a certain state where they were allowed to operate in, you could do it. But these days there's now three national sites that offer non-accredited investors. So the minimums are really low. Like I think on around like $1,000, maybe even like $500. So there's Rich Uncles, which is a triple net lease, kind of like a triple net lease REIT. You could think of it that way. There's Realty Mogul and Fundrise. Realty Mogul and Fundrise are more similar to each other. They're more like traditional real estate, where the triple net lease is like a very conservative, lower yielding, but also better performing in a recession sort of thing. And Realty Mogul and Fundrise, on the other hand, are more of like a traditional real estate where they're investing in equity in commercial properties, that sort of thing.
Right. Now, those sites also have some that you can't invest in that are for accredited investors only?
They do. Yes,
Okay.
they do. But Fundrise is now pretty much, it seems to be focusing just on non-accredited investors. And Realty Mogul may be moving over that way too. It's, in my opinion, it seems to be.
That's great. Well, this has been some fantastic information, Ian. I really appreciate your sharing this and also giving us some of your tops that people could examine further if they're interested in this. Now, our listeners, as you know, are 50-plussers that are either approaching retirement or already in retirement, and so they're very concerned about where they're going to invest their money, and this may be their life savings, this may be their 401ks or their IRAs that they've been pouring into for years, having the same feelings that you had, obviously, that this is all I got. I want to make sure I do the right thing with it. What kind of advice would you give to folks in that group? They may be looking at doing very passive stuff like through crowdfunding, or they may be looking to purchase. What would you recommend that maybe they start or get involved?
Well, it's interesting. I think in some ways, whenever there's fear, having more control, I think, actually is helpful. So maybe if they like, I mean, I do completely understand. I was in the same boat myself. But the advantage of like having, for example, single family home rentals, whether you choose to have a manager or maybe even you maybe at first even manage it yourself just to kind of learn the business and know what you're looking for. Um, I think kind of getting hands on is like a good way to feel comfortable with something. Then once you actually understand the business, then I think you can kind of feel, okay, now I can judge if someone else would be a good manager of my money or not. You know, do they understand, the things that would be needed? So, maybe that's kind of a good way for some of these people to kind of go into it. The other way would be some people are like, well, I don't have the time for that. Or, I'm just not interested in anything non-passive. It has to be passive. Then I would say if they're hesitant, they really need to partner up with someone else who's an investor, not someone who's you know, affiliated with one of the platforms, who has a conflict of interest, but a fellow investor, maybe join like a real estate investing club, in the local area or something like that. But basically find someone else who's a knowledgeable investor who can help them vet these deals so they can look at them and kind of like really give them a hard look and try to poke holes in them and say, okay, well, this is really a rosy projection, or no, this is very conservatively underwritten. And I think, it would survive if there was a problem. So I think that would be probably the way I would go if I were in their shoes.
Good advice. And that just brought a question to mind too. Do you self-manage your properties, or do you have property managers?
I actually have done both. For a while, I had a property manager, and then, like currently, I actually do not. But they actually are all set up to be almost all automated. I'm a tech guy, right? So you know that. So so everything is done over the internet. All the rental payments are done over the internet. The finding of people is done almost all through the internet.
What
So
about
a lot of us,
if a toilet gets clogged?
if the toilet gets clogged, yes, that's true. I'm not completely doing it myself. I have someone that helps me with that sort of thing.
Oh, that's great.
So maybe it's like a semi-management.
Yeah, maybe you might be able to automate that, where they have a number they call, and then somebody you have a
Hmm.
prearranged amount in mind, for unclogging a toilet. They just call direct, and the guy just
I
comes
have
and
heard of people that do that, yeah, and there are
yeah.
services that are popping up. So a lot of it is can be automated, a lot more even than when I did it the first time around in my first life. Like right now, like back then, I had to go to a broker, for example, to try to rent my property because I could advertise in the newspaper or bring it to a broker. Now there's Craigslist and there's Zillow and Hot Pads and all these things, which is completely free. Every single one of my properties, they're usually rented within the first day, if not the first day, within a couple of weeks. And that's with a very rigorous screening process. There's just, at least in Tampa anyway. I mean, it's
Hmm.
obviously different from market to market, but the demand here is really high.
That's great. Do you also take in the applications yourself, or is that processed through like a third party?
Well, I do want to automate that process a little bit more, but right now it's basically, for example, if it comes from Hot Pads, it sends a lead in, and there's like an automatic message that gets sent to them that asks them a bunch of qualifying questions.
Hmm.
And then once they respond to that, then I look at it and say, okay, does this person look good or do they not look good? And then, that actually all could be automated too as well, but it's not there yet.
Right. Oh, that's great. Well, you're still a young guy. I mean, my goodness, I don't even know how much younger you are than me, but probably twice your age. But what's ahead for you? I mean, are you looking? It sounds like you're very focused in the investment side, managing your investments. But are you looking to get a startup going or get involved in other ventures? Are you what's ahead in your future?
Well, what's funny is I was advised after I sold my company, I was told by someone, said, whatever you do, do not start another company because, it's so important. Like Ian, the first time you did it, you were hungry for it. You were willing to work 70 hours a week. You didn't have a family, all this sort of stuff. Whatever you don't do another startup. But, there's something about being an entrepreneur that makes you just want to keep doing it. And so not only do I have one startup, but I have two startups actually.
Really?
So in a way, this real estate crowdfunding review is one of them. But the other startup is a gaming company. And it's a game where people can play for a 1 minute game on their mobile phones against three other people for real money legally in about 30 different states. And the reason why it's legal is because instead of being a game of luck, it's a game of skill. They all have the exact same puzzle that they're trying to solve or whatever, which makes it legal in these states. So I have that going
That's
on.
clever. Wow.
Yeah, thank you, thank you. So, but I do admit I'm not. It's not like back in the old days when I would work 70 hours. I'm I outsource. I have people who create the program for me, and it's different. It's a lot more relaxed now than it was the first time. But I'm enjoying it, which is really nice.
Or you could do the Shark Tank thing too, right? And find
Yeah,
other interesting startups you might want to invest in. That's
yeah,
also
yeah.
another route.
Yeah, exactly. I mean, and actually, and I'm advise some of these startups too because they kind of find me through my story,
Mhm.
and they come and ask for advice. So there was recently one guy. It was really cool because he was a startup completely from scratch. He didn't even have like a co-founder. So I talked to him. He got a co-founder to help him with his product. Got accepted in this very prestigious incubator out near you actually,
Mhm.
and then brought his company to market, and then within less than a year sold it, and is now traveling around the world, and then is trying to go figure out what his next company is going to be. So it's very, very gratifying to be able to help out these young startups.
Hello, fellow old dogs. Before we jump into our wrap it up session, I just wanted to let you know that an important part of being a successful real estate investor is knowing how to regularly reduce expenses. It's a big part of what I do every day to maintain a healthy real estate portfolio. Well, I try to do the same thing with my personal finances as well. When I heard about a health insurance company that gave special rates to those of us old dogs who try to eat right, exercise, and stay healthy, I got very stoked. Health IQ gives health-conscious people the best life insurance rates and quotes. Learn about what they can do for you specifically at healthiq.com/old dog. That's all lowercase letters, and dog is spelled DAWG. That's healthiq.com/old dog. Check them out. Wow. Well, we're look like here. I could probably continue talking here for a long time with you. No, this is fascinating. You got a great background, good outlook here, and but coming kind of near the end of our time span here, and this is what we call our wrap it up session, where I ask you a series of quick questions and hopefully quick replies and just information you can share on resources that might be helpful for our listeners. Are you ready?
I'm ready.
All right. First question. Favorite real estate book?
Big Shifts Ahead. This is a new one that my father-in-law cued me into. It's called Demographic Clarity for Businesses, but it's really about real estate businesses. And what they do is they break up the generations instead of it's 25, they break it up into decades, and it really helps you target, your real estate investments.
God, that's great. I want to get that book. That's
Yeah,
great.
it's awesome.
I
I'm
didn't know
loving
about that. That's great.
it.
How about your favorite business book?
So my favorite business book is Built to Last, which
Mm,
is a book about how you don't build a business short term and then hope to sell it, which is actually what most people do because, a lot of times you take shortcuts that kill the business. So you build it as if it's going to last for forever. And that's one of my favorite business books.
excellent. How about your most valuable website for success? I have to say, other than your own.
Well, actually, for me, investing in real estate, it's all about understanding the trends. And you can't understand trends. What is happening with millennials? What is all this stuff that's going on and going to be happening without keeping on top of the news? So it's every day, New York Times, Wall Street Journal. I'm reading all these different things, looking for trends, trying to understand, what's going to be happening, and then how that's going to affect my investments and how I want to invest.
Great. How about most favorite app?
My favorite app? Well, I mean, probably I use Uber a lot
Mhm.
because I injured myself not too long ago with my wrist and I wasn't able to drive. So it's been a lifesaver.
Really? That's interesting. Of all the apps that you would have picked, it was totally
I
totally
know.
surprised me. Now, have you done Lyft too? Have you compared them?
Yeah, I have done Lyft too. I think at least in this area, Lyft is a little bit cheaper. So people that are they're looking to compare, I think Uber's got some competition going on.
Yeah, yeah. Well, here it's funny. I've tried. I have a Lyft app on my phone, and every time I've bid for, went for something, it's always, I don't, maybe it might be the way they lay out it. They give you a range, but it always looked like it was. I was always figuring the top of the range, so I didn't. I never went with Lyft. I would go with Uber, but interesting. Anyway, this is not. They're not asking me the questions. I'm asking you. Okay, so how about your favorite quote?
My favorite quote, it's probably that one where they say that, the best revenge is just living well, because it's like it's so easy, I think, to get caught up in maybe negativity or things like that, and it's
Yeah.
like just I just try to whenever that happens, I just try to focus on just doing my own thing, and and I think that's kind of the best way to go.
That's great. And one last question here, and this is the the sort of the apocalyptic question here. What happens if you lost everything you had? And I mean everything, and all you had was just $1,000 US. How would you take?
Ouch.
Yeah, I know. I know. This is like I'm preying on your fears here. No, but okay. But every time we have sirens go off, we have these dogs howling here. They're anticipating your howl coming up at the end of this, so I think they're just anyway. Sorry, I get distracted. Okay, we're here in the apocalypse here. Okay, $1,000 is all you have left. How would you use that 1,000 to sort of regain your wealth?
Okay, so 1,000 is not a lot of money, obviously. It's if I've lost everything, it's like I can't afford to lose much of that either. So, there's no gain without risk, and the more you try to push for yield, the more risk you have to take. So if I only have $1,000 left, I'm going to be very cautious with that money, but I'm going to put it in something. So I'm not going to put it in the stock market. I think what I would do is, however I got that $1,000, I'm going to try to do a little bit more of that and try to save up enough, maybe for a down payment. And if I could get a down payment on something, I think then I would be set, because then I could purchase a house. I could rent it out, and then so that would be the key. I would be just focusing on whatever it is that it took, and keeping the money safe and not losing it.
Good advice. Actually, you should listen to, let's see, podcast number 021. We had Brandon Turner on, one of the guys from biggerpockets.com.
Oh, yeah.
Yeah, and he talked all about buying property with little or no money down. So his answer, which was, he answered the same question, and he actually said, I wouldn't spend it at all. He goes, I'd get somebody else's money, okay, to purchase a property, and in other words, a seller carryback or something, or an investor, or what have you.
Yes.
Yeah, and then he would save the 1,000 for to take these people to lunch that are going to help fund the rest of his deals. Anyway, so I don't know, just sharing that with you. Just
good answer.
So you might not have to spend it,
Yeah.
Okay. Yeah. So let's see. Right now, how would, if people wanted to, let's say, reach you, wanted to get information, or I don't know how accessible your website is in terms of people asking questions or whatever, but what's the best way for people to reach you? Maybe it's somebody that is an entrepreneur or wants to talk to you, or whatever, but what's sort of the best way people can do that?
So they actually can go through the website. So they go to the real estate crowdfunding review, the contact, send me an email. I will see it. They also could write to me at my Excedra address, like an entrepreneur who wants some advice. So that is just my name at Excedra.com, EXHEDRA, which is my parent company. And or they can look me up on LinkedIn. So any of those ways.
Oh, great. Okay, well, this is the inevitable conclusion. I can't talk much of it, but this is the conclusion of all of our programs, where our guests really get to share their expertise here. And this is our closing howl. And, we're called the Old Dogs REI Network. So we're just a bunch of old dogs that just love to sit around and howl all the time. So so we're here to be a focus for you to just reach the thousands of listeners out there so that they can hear Ian's howl here. And just to let you know, it's not for nothing. We know you have the game that you can bet on this game and you can win money and stuff, so forth. Well, your howl is actually going to be entered into a contest with all of our other guests.
Okay.
And we are going to have coming up here our 2017 Old Dog Golden Howl Awards. And
Wow.
and our listeners get to vote, and we're going to have all these sample howls. And so you never know. You may make it into the finals there. So
I got to make it worth it. Yeah, I gotcha.
It's exactly right. And we've had guests that have said, because gosh, we had such a great interview. It's just all my credibility is going all down the tubes now. And I go, not true, because all of our listeners are, they have to be a little crazy to listen to me. So anyway, but here we go, Ian. With that introduction, go ahead and give us your best old hound dog howl.
Woo, 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 woo!
Bravo. That was good. Oh, man. Well, Ian, this has been such a blast having you on. And what fantastic information. I think that's just pertinent to everybody that listens to this show. So thank you again for taking the time out to be with us here.
Yes, my pleasure. Thank you so much for having me.
Oh, no, it's been our pleasure. And I just want to thank also all our Old Dog listeners out there, too, for joining us. I know there's a lot of other things you guys could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Listen, if you listen to the show, make sure that if you want to access any of the information that Ian has said, he's had a lot of links and various things in his presentation. All of that is available at our website at olddogsreinetwork.com/blog. And I believe this is going to be episode number 097. So just look up 097 and you'll get all the information there. Well, that's the show for today. Remember, cash flow is king, real estate investing the means. And until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.